Hey everybody, it's Mark from dynamitestocks.com and stockpursuit.com. I just wanted to do a video on some of my thoughts that I'm having this morning. Uh, I actually listened to most of the Google quarter, most of the earnings call, and I'm just sipping some coffee here and looking at some charts and reading some news headlines. With the Google thing, I still have to remind myself that we're still really early with AI adoption and with the adoption of these LLMs in the mainstream public. So the way what I've been, the research I've been doing is that Yahoo. Well, I mean, I don't have to research it. I remember back in the mid '90s, um, pretty much it was the companies and institutions, with money that were using the internet first, in the mid '90s, early '90s. Like the average everyday person didn't have a fast internet, and fast back then was, pretty slow, of course, as it just got better and better. But and that was a really gradual process. It didn't jump to high speed internet overnight or in a year. So all these downfalls that these LLMs have, this is gonna improve, I think, as the smaller LLMs become more mainstream and adopted, because they need them to solve problems. Like we just need productivity and problem solving from them. So that's what I think. I think the best case is that scenario where these. And I follow a lot of people on Twitter. Like I follow this guy. He's building his own LLM. And a lot of people are building them these days. To suit a specific need and not just be a out of the box, everything in one, like OpenAI wants to be, or even Google or Microsoft. But that's sort of the crux of the argument against Google. Because like back in the mid '90s, 95. I think the first time I used the internet was '95 or '96, and it was Yahoo, and it was at my dad's office, and my dad worked for a community college his whole life pretty much, and he had they're in office, and I just went to see his office one day, and I guess it was '95, '96. I was really young. I was like 13 or 14 or something like that, and he had, I guess it was dial up, but I don't remember if it was. I mean, I guess it was dial up back then, but anyway, the Yahoo homepage was pretty archaic and um, but I mean, there weren't ads, like there were no pop-ups on Yahoo, or it was a pretty cool browsing experience back then. So but the fact being is that he had the internet because he worked, for a institution that had the money to buy it, and I think that's even the barrier to entry, sort of, for the average person getting their hands on these LLMs is even smaller now. So you can see, like, I think we're going to see the proliferation be faster than with the internet. And I think the internet was sort of the beginning of sort of a new technology wave that we're seeing with AI. Because first you needed the infrastructure. It's like the infrastructure for everything. So but I'm kind of a sci-fi nerd, so I like to think about that stuff. But I've never really been a big tech person. Like I've never had to have the newest tech gadgets, or like read about it even. Like, I mean, I was pretty young when the internet came out, but I just see the promise with these LLMs and neural nets going forward. Even, I mean, OpenAI has a mission statement of creating artificial general intelligence. So as long as the funding keeps going into these companies, and I mean, we know tech has a lot of cash, so these big tech companies are going to do pretty well, with the technology. Even the smaller ones, we may find out here that it doesn't take a lot of money to train a model and create, an LLM that's superior or on the same level as a big LLM, like OpenAI's and like Microsoft, Google's, even Meta's, or I mean, you saw the Meta Llama is available now. So my hunch is that it's going to accelerate to the point where these more and more of these stories come out about breakthroughs or being incorporated in our everyday lives. Like, I'm just looking at an article right now. It's been in the news before about with Wendy's and the drive-thrus. They're going to use chatbots in these drive-thrus, and I imagine there's a lot of companies working on this. I mean, I would like to work on something like this if I had if I was in position for it, like because that's going to work. I mean, it's going to be great. Like with the labor shortages, like it's kind of a perfect time. It's like perfect timing because I used to run restaurants. Like I ran a pizza restaurant, and the number one problem is I didn't have enough people. Didn't have any people. Like and when we got this labor shortage, like it's always been hard to find people in the pizza restaurant business anyway. And the more people you have, the better you can run it, of course. So it's hard to run a pizza restaurant when you're short-staffed. So we see the same thing here with these with fast food drive-thrus are going to be replaced by these chatbots. And I think it'll happen. I mean, from what I've seen with the speed of some of these LLMs, like Pi, it's gonna happen. Because the initial problem was they were kind of slow, but I think it's possible that they'll be fast enough. Or it looks like they're fast enough to be near a human level. So I mean, with the processing. So looks like the news story is saying Hardee's, Carl's Jr.'s, Checkers, Del Taco are using this technology. I guess they've been testing it. They've been doing some tests on it. Wendy's with Google and McDonald's with IBM. So we've got a bunch of companies there that are public that are going to have some increased productivity. I mean, by a lot, like some serious increased productivity if they can get that drive-through position filled by an AI, which is what's going to happen. Looks like. I mean, they're just kind of working out the kinks. Like they said he couldn't answer the question like how many calories were in something, but I don't see why. I mean, like ChatGPT or one of those can definitely answer that. So I don't see why there's going to be. I don't see there being any serious obstacles to this working and from the stuff I've seen with, listen to a lot of videos where, like sales calls with, there's sales calls where they do a sales call with an AI. So that's pretty exciting. It's going to really help out the food industry, and food industry is a big industry. Like, that's a really big industry. The next, so more on the Google thing. We're back to the Google story. Is they had a good quarter. I always like to look at earnings, at their earnings trajectory. So they missed earnings for a long time. Like, for many quarters, they missed earnings, and then I guess it was Q1. Their earnings surprised. They had a surprise to the upside, and that's what you like. That's what you like to see when you're looking for a sort of reversal in the fundamentals, because they basically, something good's going on, and there's a shift. So, I mean, whether it's shift could be in demand or in the company's profitability, but it looks like they beat this last quarter. So by shorting the stock, like, I haven't actually shorted it. I traded some like 2 weeks out puts before, and I bought some some 100 strike puts, like, a month or two out, but I haven't really gone super deep, super heavy into it, because I didn't know it was going to happen with the earnings report, because it's been pretty critical, like what they've been saying in earnings. So I'm just going to have to wait for some technical weakness, and even for some fundamental weakness, because, like I was saying, like, we're really early still. Like, the statistics were about 15% of people have used ChatGPT this year, so it's probably up a lot. I mean, it's probably up a good bit now, because that was a few months ago, but it's not even a fourth of Americans have used, or probably even know, they probably don't know what ChatGPT is, right? So that's kind of like with 1995 when Yahoo came out. 6% of Americans had used Yahoo in 1995. Yahoo was the big one then. So of course we know what happened with people using the internet. So it just went up and up. So if it's helpful, and obviously it's helpful, so it's gonna just keep expanding. Everything's gonna keep growing. So and most people haven't tried anything that's to search the internet without Google. So I think my hunch is it's going to be whenever Apple rolls out their newest personal assistant, an AI, if they still call it Siri or whatever, that's when you're going to see people really realize that there's better alternatives than scrolling through 10 links and pages of ads and cookies and pop-ups and all the garbage that's in the internet search nowadays. Like I was saying, the Google product for search was a lot better, back in the early 2000s, in many ways, because they didn't have as many ads on the page, and the top of the above the fold didn't have any ads. I mean, they just had, like, they start putting 1 or 2 in, but since they become a monopoly in essence, and with YouTube, they're just riding the ads on that. So it'll be interesting to see, like, because it looks like they're working on. I mean, Google realizes this too, so they're working on alternatives. I've tried out of course I've used Bard, but there's another. They have other ones too that they're working on. They have one that's in a trial run. I still need to try that one out. I haven't tried it out yet. Because my hunch is they're gonna have they'll just have a mix of generative AI and links, and they'll somehow figure out how to get the ads in there. But it's still, I mean, I don't see it being the same amount of ads. They're not gonna be able to put as many ads. I just don't see it like if the competition's gonna have less ads. Maybe, but Yahoo under YouTube just plasters ads on all the videos, and people still go to YouTube, and they make you get around that with a subscription. But my hunch is that since it's a new technology, the new better alternatives might catch on to the general public. And it's going to take time. It's going to take maybe years, like maybe 2 years. Who knows? Like, it's not going to happen, next year, next quarter probably, because we've seen their search was actually pretty good. So, and you look at the market share; they still got market share. So, it's hard to get super bearish on Google right now. Because it looks like in the pattern the earnings date basically nullified the top that was setting up, in which now a trading range. So it's got to hold this trading range, because it could be a failed signal. A failed signal would be if it keeps breaking out here. So I know I've been posting a lot of bearish Google stuff, so I just wanted to kind of give the overview of my thesis and the timing. So I'm not crazy enough to just start buying tons of puts on it. Like, it's just, that would be pretty futile when we've seen these quarters come out. Like, it's going to take a news event. It's going to take a bad quarter for search. It's going to take something to it's going to take the general public to catch on to these things, and then I don't see Google having the same moat. I mean, their moat is search. That's how they became the company they are today, is through controlling the internet, and it's like controlling what people are seeing on their landing pages, on the search. So, and their advertising business is the biggest business segment they have, and that's how they got into everything else, pretty much. They may have had these things that in the works when they started, but search is Google, and if there's a superior alternative that the public catches on to, then there'll be some serious loss of revenue. But we'll see how long it takes. I'm pretty confident that it'll happen. It's because I'm using the technology early. I'm using these LLMs a lot earlier than most people, so I'm aware of the many kinds of them already. So I just don't see Google as the same company in 5 or 10 years. And they could easily get away from search ads, and they can maybe they figure something else out, or they buy another company, or who knows. But we'll see what happens with that. But that BBIG that was my main short watch. BBIG crashed 12% yesterday. So so I'm gonna look for some more of these spikers that are these supernovas, because I have a hunch that it's just gonna continue. There's gonna be more and more of these short squeezes as the market makes more highs. I mean, on the Dow and the when you look at XLI, I've been tweeting on XLI for a long time. It just did I use what's called an internal trend line when I draw trend lines. So I just find the points that are most touched, that like you want to make it so where it's like at levels that have been the most used, most respected. So right here we got, man, it's it came up to trend support and it failed trend support, and then it reclaimed trend support, which is basically a failed signal. And a failed signal, I just talked about that before, it's a very powerful chart signal. It means that the market's reversing. The market has to adapt really quickly to a failed move. So man, this is really good. So we got a triangle now, and we've got a breakout. I mean, it's already up so much. Like, I mean, I guess it's not up that much relative, but this is a good setup long on the continued strength. So if it takes out 110.05, that's pretty good long. Let's look at the Dow, because everybody's talking about the Dow and how many days it did straight. Yeah, it did kind of the same thing. It tried to take out some. It almost tried to break down there and broke out again. I mean, it looks pretty good too. I mean, wow, yeah. So it goes back to goes all the way. I'm just drawing an internal trend line here. So that's kind of like what I've been looking at a lot. I've been seeing a lot is this trading range starts to break out. I've tweeted a lot of tickers that are doing that stuff. I think Papa John's is the last one. It's just a common theme here. So yeah, that one. See, the failed signal on this one is right here, in March, where it tried to break down from this, tried to do a technical breakdown, and then, whoops, quickly reversed, and then the market gets caught. So, and the fact that it's technically broken out again, that's a failed signal now. So it's pretty powerful. I remember back in 2009, when the market was coming off a the significant crash in the market. It's not similar to 2022, but in a way it is, because it just sold off. It's a sell off. So when it started to get strength in 2009, it bottomed out. I mean, this is a very similar to the 2009 bottom, as far as the technicals. Like I was saying, that the bottom has been put in. There's no doubt that the bottom right here is put in on the Dow. And of course, anything can happen, and this may not hold, but I mean, you've got a technical bottom here. I mean, you've got higher lows. So let's just draw another trend line. So yeah, it could easily come back. It can come back to that 340. So I just drew a trendline support. It wouldn't surprise me if it retested this if it retested the 345 area, tested this trend line 348. So about in that area, 345, 348, it could easily come back to that. I mean, probably more likely is it just keeps going, because it's sort of a failed signal and everybody's scrambling now to get long. So yeah, I think that's what I want to touch on. The Google and what's going on with the Dow. But yeah, don't be surprised if it pulls back here. I mean, it can pull back all the way to this trend line and still be an uptrend. So if it pulls back to, I don't want to mess this chart up, but it'll be probably like 345. Whatever this line is, let's blow it up here. That line there, it can come back to that line and retest it, test it, and hold it, and still be an uptrend. So it's pretty good technicals here, and let's pull out. Well, it's got some resistance to take out. But I mean, yeah, you gotta watch what it does up here. We gotta see what it does to that the 2001 highs, because the 2001 high, or 2021 highs. Sorry, rather 2021. 2021 was sort of the peak of the interest rate cycle. And everything that was like crypto and everything was at the top. So that's something to keep an eye on. As we go forward. The banks, I totally got that wrong. I thought there was going to be some volatility, but I kind of been ignoring the banks after I tried to short them so many times, like in April and June. But because I shorted had puts on FRC the second day or the first day of the news, and that was like a 4,700% gain on the puts, and it was a great trade. I mean, it could have been better, like because I didn't buy enough strikes out. I didn't buy enough months out, because I mean, I think I was shorting it. I mean, I was buying puts when it was like 70 or it was like $60 or $70 a share. So, but I mean, that's the way it is. Sometimes, you don't always have the right sizing and everything. So, yeah, the other thing was that, yeah, China still looks pretty good. It's still holding this range. It's a range, kind of like the Dow. Actually, now I look at it, like you got this possibly potential failed signal here in May. So I think I'm still bullish on China. Just because I think, with the way the world's economies are connected now, you're not going to see, I don't think you can see China and the U.S. and divergent for so long. I mean, it used to be that China would lead us. China's market would lead the U.S. market. The emerging market ETF looks a little better, actually. Yeah, that's a good one. Yeah. EWZ, Brazil. Oh man, I think that's actually a breakout now. Or it's right up. It's right up against that level. It's got significant resistance here. but it's got a clear uptrend too. So as long as this uptrend holds, I mean, it's good to go. I'm just drawing up some trend lines here, but yeah, that one I would say watch that trend line on Brazil, and it looks good. Yeah, that one's a good one. I'm not sure what's going on with these commodities. I've got some DBC calls, but usually oil, when it starts to go, it just keeps going and going. So that's one to watch too. Is this is oil. But that's all I've got for today, and catch you later.